Section 1. Trading Plan, Your Roadmap to Success. Written by Erin Burnett from CNN. Imagine setting off on a journey without a map or GPS. That's what trading without a plan is like. A trading plan acts as your roadmap, guiding you through the exciting but potentially risky world of financial markets. It helps you make calculated decisions, manage your emotions, and ultimately increase your chances of success. This guide will walk you step by step through creating your own trading plan. Don't worry if you're new to trading. We'll explain everything in simple terms, avoiding complicated jargon. Whether you're interested in stocks, currencies, or cryptocurrencies, a well-defined trading plan is essential. Think of your trading plan as a business plan. It outlines your trading goals, strategies, and risk tolerance. It helps you stay disciplined, avoid impulsive decisions, and track your progress over time. By the end of this guide, you'll have the knowledge to create a trading plan tailored to your individual needs and goals. So let's dive in and start building your path to trading success. Section 2. What kind of trader are you? Before diving into the specifics of your trading plan, it's important to identify your trading style. This largely depends on your time commitment and risk appetite. Two common types of traders are intraday traders. These traders, also known as day traders, open and close their positions within the same trading day. They aim to profit from short-term price fluctuations. This style requires close attention to the markets and the ability to make quick decisions. Position traders. These traders hold positions for longer periods, ranging from weeks to months, even years. They focus on long-term market trends and are less concerned with short-term price swings. This style requires patience and a solid understanding of fundamental analysis. Choosing your trading style is a personal decision. Consider your lifestyle, risk tolerance, and how much time you can dedicate to trading. Once you've identified your trading style, you can tailor your trading plan accordingly. Section 3. Sharpening your trading skills. Developing your trading skills is an ongoing process, even for seasoned professionals. The market is constantly evolving, and staying ahead of the curve requires continuous learning and adaptation. One valuable skill for any trader is understanding price action strategies. This involves analyzing historical price movements to identify patterns and trends that can help predict future price behavior. Start by studying basic candlestick patterns and chart formations. Numerous online resources and courses can help you grasp these concepts. Practice identifying these patterns on historical charts and eventually on live market data. Remember, trading involves risk, and no strategy guarantees profits. However, by mastering price action strategies and other technical analysis tools, you can make more informed trading decisions and increase your chances of success. Section 4. Protecting your capital risk management. Risk management is arguably the most critical aspect of trading. It's not about avoiding losses altogether, as that's impossible. Instead, it's about minimizing potential losses and protecting your capital so you can continue trading. A golden rule in trading is to never risk more than you can afford to lose. Start by determining a comfortable risk percentage per trade. A common recommendation for beginners is to risk no more than 1% of your total trading capital on a single trade. For example, if you have $10,000 in your trading account, your maximum risk per trade should be $100, which is 1% of $10,000. This limits your downside potential and prevents small losses from wiping out your entire account. Another essential risk management tool is setting stop-loss orders. A stop-loss order automatically closes your trade when the price reaches a predetermined level, limiting your losses on a losing trade. By implementing sound risk management techniques, you protect your capital and ensure you can stay in the game even after experiencing inevitable losses.